Hello guys, and glad to have you on board again today. Real quick updates on a few assets, and we first and foremost are going to talk about yesterday's deeply painful events for whoever is a progressist person out there. So of course, very dangerous times for democracy. Looking at a president who is keep on lying, and there is no simply other words over this. There are simply no courts in the US who has alleged reality of actually a stolen election, whatever the fuck the bullshit this guy is saying, and I can hardly stress that enough. That is freakingly dangerous for democracy to see some people in the US who have totally the right to do so and to go down the streets and manifest for what they feel is a stolen election, but to see an elected current president basically boasting this set of people out of absolutely no rational clues, but just pure fucking lies, is absolutely dangerous for democracy, because what it has led to later yesterday is basically these rioters getting into the Congress chamber and the Senate, picturing themselves half naked, with horns on the head, whatever. Jesus motherfuck, I can't stress how complicated that is for the US right now to navigate such a thing, morally speaking. But does that mean the markets have to fall off a cliff just because of it? Then there's absolutely no straight link between the two things. Remember that the markets are pricings for companies. What the fuck is the direct link between people getting to fire into the Congress, stopping an electoral college process and stuff like that, getting themselves into the Senate half naked and stuff like I said, this is really, really deeply painful for democratic supporters. But still, no matter how complicated that is, it makes no sense on changing asset prices, companies' valuations. So don't let yourself being influenced with these decisions. More importantly, we're going to first talk about it. Just have a look at the NASDAQ. I mean, I guess you've seen this signal already. We do have an absolutely awful exit signal with a confirmation candle out of a pretty overbought market, so very dangerous level. This really looks like a final excessive perspective, but also remember that this fairly much looks like a wave one extended, which means remember that in these structures you will have the feeling that this is the end of it, and generally isn't. We generally build an overlapping structure and finally makes generally two sets of final excesses. So this final excess in here really, in my personal behavior, doesn't look like the one that it's going to be the big short whatever. Just feels like we're going to get a pullback, pretty much a one-time thing, probably one bearish session, and then we're over and we'll get back to new historical highs, building a second final excess generally aligned with the previous one. This is, of course, along with the trading lesson stuff. So you should be familiar with this. And until further notice, I'm going to trade this that way. So there's no emergency exit rush into the bearishness and stuff like that. Having a covered portfolio right now, God fucking yes. But no more than that. And don't let democracy jitters let yourself being over bearish. Okay, these things has nothing to do with the reality of companies' asset prices. Okay, so that's the message for today. No matter how painful this can be, morally speaking, and how immoral the current president's behavior could look like, it has no meaning at changing asset prices. So don't be over bearish. That would be actually totally stupid to do so. More importantly, I'm going to release the Euro briefing probably later today. I'm going to have to record it this morning. I've done it yesterday for the French guys. So lots of warnings into 2021 heading into these things. And most of what I've just said previously is totally into the perspective I'm putting myself into for 21. So I'll let you know all of this into greater details, of course. So don't overestimate these types of signals, even though they totally signal that this is not an appropriate time to be stupidly bullish. It is not neither an appropriate time to be excessively bearish as well. So stay put, patient, focused, patient most importantly, because these types of signals have a particularity. The first one being that they open and at the first candle of a close of a context box closure, and most importantly they happen after closing at the high, which means these context box Okay, this one opened in here, closed at the high, and we just pulled back at the early stages of these close, at the early stages of the forthcoming context box that will terminate at the end of January. So this is a monthly context box. Remember that the context is 2 time frames above the local chart time frame, but also in here it is a quarterly close, just as a yearly as well. But that means the higher time frames context is closing in here, which means this is not just the first candle of these context box. This is also the first candle of the quarterly candle close heading into May, and this is also the first candle of the fucking year. So it is definitely the first of something. And you must be aware of this. The early signals we get on the first candles of a new box generally means that it slightly undermines the quality of the signals that might emerge. So even though we have a confirmed candle exit pattern, don't go too much on this one. That doesn't mean you must not trade it. Let me be clear. I am bearish right now on the NASDAQ. The question is, I know how dangerous that is because of the actual timing of this showing up at the first day of 2021. Okay? So don't go extremely bearish. Like I said, the sentiment might lead you to this, to be aggressively bearish, and don't be, all of my warnings for 2021 will be along the sentiment, okay? Not spoiling the year briefing. Okay, despite that, we have things to talk about. First and foremost, Ripple. So I've decided this morning to get the fuck out of Ripple because of the speculative trade I've made in here on the overlapping level. I totally missed my profit taking out there. Remember that my profit taking area was 0.85, never been reached out to with Binance. So I totally missed the shot. But anyway, I still had that trade. I have my buy and holds, and I'm not changing anything with these. I still have them. But my speculative trading here, I decided to take it off the table at 0.30 earlier today. I think that's, rationally speaking, if you really want to jump off that boat, this is probably the best possible opportunity you'll get. I expected a pullback to 0.30, so now that it's done, we'll see what this thing really is all about. If we get over this, if we can restore prices above 0.30, that would clearly, I think, mean that this thing was pretty much over bearish and we overexcited ourselves or got over pessimistic on this thing with the SEC. The other stuff is basically that could be the only opportunity to pull back to 0.30 and later in the future keep on deteriorating prices to much lower valuations. So we'll see all about that. I clearly don't know anything about the future. All I can tell is that if you want off on Ripple, if you want to jump off board, this is the appropriate timing to do so. If you feel like you want to play this over longer term perspective and this is fairly risky, then just keep it up. That's simple as that. It's a binary choice. Either this thing will recover or it won't, and we can hardly stress that. Like I told you, I'm not going to trade this thing for at least 2 to 3 quarters starting now, but I still had my speculative trade, and this one I decided to take it off. That's still with a nice approximately 30% value increase, so it's still a profit. But like I said, I don't really want to keep on a speculative trade. I'm definitely holding my buy and holds, no questions about these, but these speculative trade, I still had it on board. I decided to take it off. That's all about it. So don't make it overcomplicated. I'm not saying sell Ripple. All I'm saying is if you want out, that might be the opportunity you look for. Okay, despite that, yesterday had been a hell of a day for crypto. Bitcoin still pushing higher and higher and higher. Still no signals. Of course, yesterday is a candle that decided to close right at the top. So we're going blow off top today. We'll see if today is the type of candle that will trigger a signal. We do have cycle alignment in here, so I'm totally favorable for pullbacks. This is, of course, one of the major topics over the 2021 briefing. And like I said, no spoiler, but I suspect we're going to get an ugly fat range in cryptocurrencies earlier 2021. So like I suggested a few days ago, it is an appropriate time right now to lock on some of your gains. If you were a buy and holder, of course. If you're a short-term speculator, you can keep riding that thing as long as it doesn't collapse. Be aware that it's going to be fairly dangerous. But despite that anyway, if you were a buy and holder, we've reached out to validation and confirmation level, validation and confirmation level on Bitcoin. Validation level on pretty much all other cryptocurrencies. So in this perspective, as we've reached out validation level on the buy and hold. You must act. Acting doesn't mean getting the fuck out. You bought and hold, so you traded on much larger time frames. But as you validate, which is the first positive reaction toward your entries, then you must secure the initial capital. You've invested some money, take it off the table, and leave the rest. That's pretty much what you need to do right now, if not already. So God knows how much you invested into those buy and holds initially. Take it off and leave the rest. Don't forget to put it into hardware wallets if you have quite some value in these cryptocurrencies you own. Of course, if you have like $500 value of crypto assets, that depends on how much money you have. Of course, for those level of valuations, don't spend money for a hardware wallet. That would be absolutely stupid. But at that point, the thing you need to do is pull off the initial investment, put it into any other investment stuff, like open an investment portfolio. If you were trading just cryptocurrencies, 2021 might be an appropriate time to start diversifying into some other perspectives. And if you already have a speculative account funded and so on, just take those gains and I don't know, I mean, enjoy life or use it to increase your speculative capital, but take it off the crypto account. Okay, so initial investment off, wait for ranges to build. No matter how high we go, don't let yourself over speculate because of the short-term momentum. Don't be dumb. Okay, it's going to be stupid and I'm goddamn sure about it. 2021 is not going to be an easy year for crypto, at least at the beginning of it. No spoilers, all of this will be much more in details into the year review. Okay, regarding the Bitcoin dominance, we have reached out to some support, which is basically no more than the previous resistance. I suspect the market is going to take quite some time working around these areas, basically highlighting a support, and the alt season will never exist until we actually break through this level, putting an end to the probability of market's behavior to actively break over this resistance. Because remember that we've inched and dipped a toe into those territories, basically flushed it as a double top pattern for now, but the double top pattern requires breaking a support to actually validate. So we'll see all about that. There's still a fairly reasonable probability in which we just keep on rising, building a support over this previous resistance and keep pushing over 73. And in that perspective, I'll have to readjust the entire 21 scenario. Though that's the reason why I think in the meantime, probably early 21 is going to be boringly not going there, not to send a signal, not going there to avoid sending another signal, and basically keeping yourselves in between in a very boring range arbitrage type of stuff. So we'll see all about that, but I think short-term arbitraging is what the crypto market is about to do. Mostly arbitraging the dominance into very narrow levels, which means very few actually low-risk tradable opportunities right now. So stay put and get the fuck out of crypto for a little while. When I say get out, I'm not saying sell the fucking crap and don't trade it. I'm saying keep the fucking buy and holds, secure the initial investments, and wait for much more appropriate timings to trade again. But not now. It's going to be noisy, it's going to be stupidly volatile and sentiment-based. Okay, so that's all about it. Despite that, for more experienced traders, we keep bear in mind the speculative area for US oil, because we are into the speculative area looking for reversals. Still no signals so far, but we're definitely going to have to monitor this within the next few days. Speculators and experienced speculators only, of course, because this is reversal perspective in a very low volatile levels. So Jesus fuck, don't go down this road if you're not ready for it, and this really requires a shit ton of experience. That's pretty much all about it. Also talking about the Russell 2000 reaching out, same speculative reversal area with a very tough shitty momentum. So we'll see all about that, waiting for signals within the next few days and weeks into the Russell. Speculators, very experienced ones, of course, in here, same type of stuff, reversal trades. So don't go down this road if you're not ready for it. Despite that, I see nothing else to do but to just wait or go real short-term trades like intraday perspective. You know the strategies, nothing to invent, just play the goddamn rules and do your job. On a day-to-day basis, that's the smartest thing you should do, okay? So pay attention to all of these things. Be real smart into the way you start 2021. Lower the position sizing. Go short term because there's nothing else to do right now. Swing trade is absolutely unable to be performed earlier 2021. We're going to wait for chaos to stabilize a little while. Okay, that's pretty much about it. We need to talk about also Apple and Amazon real quick. Apple is going once again into dangerous territories. Yesterday's candle close absolutely not good. Closing at the lows with an ugly upper shadow candle and a gap down. This could be a bad sign if for some reasons today we're going lower. Like we said, yesterday might be totally painful for the marketing supporters, but still, it's still not a reason to actually go over bearish. So these things could turn out ugly. We've seen that the Nasdaq is showing some weaknesses. So I suspect Apple might start raising some concerns, but don't tell yourself that, okay, we're reintegrating the firstly broken third range boundary and stuff like that. So this is the end of the world. I think we're going to get there with Apple, but that still stands that this is breaking this level that would actually signal a fairly bearish signal. So don't be over bearish on Apple either. It could recover from these levels, okay? So I'm going to short sell Apple again. I'm going to get back on it because they basically have market makes my stop loss in here, and I don't like that. But I'd rather want it to be safe because when we got out there, market could just have surged to some stupid valuations, and I simply didn't want to take the risk. So I took a $10 stop loss per share, and I'm going back at selling Apple, but that depends on today's session, okay? And most importantly, this is once again experienced speculators only. This is the hardest thing to ever do, shorting a bubble, okay? And I know I might be the type of things in which I'm going to have to try multiple times before catching the actual right timing, okay? And like I said, I don't think this is right now. I think we have still plenty of time. So getting back at it smartly with defined position sizing and a very well setted mindset, which is the thing that most of you guys simply don't have. So I'm talking about it for transparency purposes only. Just don't go down this road, please. Same thing for Amazon. We're reaching out dangerous levels in which we're testing the support trend line of this ugly fat expanding plus contraction, which is a diamond structure introduced by a very low volatile directional move, which I suspect will have the exact same opposite structure if we break it down. But same problem with the timing with the Nasdaq. I suspect some false breakout might eventually show up and eventually try to reintegrate later on. So if you go down short selling Amazon, be aware that the stop loss simply cannot be put out there. It will be way too dangerous to do such a thing, okay? So once again, even though you might think you can make a shit ton of money with this, these trades, professionals only, please. So step aside. I'm sharing this trade because of transparency purposes. But I don't think the timing for bear trades is yet there. I think that what we have is a timing for pre-bearish signals eventually, but no more than that. Okay, I'll keep you posted with this, but just be smart enough to understand that the initial reversals we might have set it on the 1st of January might not be actually pulled through because they occur at a switch of new candles to show up, at the first candles of new longer terms candle, which somehow undermines part of the signals we've seen, and they don't behave with the current context. Okay, that being said, wish you guys a pleasant day and see you guys later.